What if the real rulers of the world don't appear on ballots, don't speak on television, and don't even have official titles? What if the most powerful force shaping modern civilization isn't a government, corporation, or even a billionaire, but a series of invisible credit networks operating quietly in the background, dictating the rise and fall of nations without anyone noticing? Because here's the truth you were never meant to see. Governments issue laws, but credit networks issue permission. Permission to grow, permission to collapse, permission to exist. Today, you'll discover how these networks evolved from medieval merchant circles to modern digital clearing systems, how they conquered entire empires without firing a shot, and how they became more powerful than any elected institution on Earth. But to understand how we got here, we must go back long before central banks existed to a world where money didn't flow, unless invisible credit brokers allowed it to. We often imagine ancient power as physical, soldiers, armies, weapons, kings. But behind the scenes, in the shadows of every empire, there was another kind of power, one that didn't rely on swords or thrones. It relied on trust, and the people who controlled trust controlled everything. The medieval merchant web in the 12th and 13th centuries, Europe was fragmented, violent, and unpredictable. Borders changed constantly. Kings defaulted on debts routinely. Transporting gold was dangerous and slow, so merchants invented a new system: letters of credit, paper promises, invisible wealth that moved faster than armies. Merchant in Venice could issue a credit note to a trader in Bruges, who could redeem it in Florence, who could transfer it to London, all without moving a single coin. This was the moment everything changed. Because those who issued the notes, the merchant families, the early bankers, discovered they didn't just move money. They controlled who was allowed to participate in the economy. And eventually, they controlled the kings themselves. The rise of network power. As these networks grew, one fact became undeniable. A king could order people to war, but a credit network could bankrupt him. The Medici family financed popes, monarchs, and entire wars. The Fuggers funded the Holy Roman Empire. Genoese bankers effectively ran Spain's treasure supply. Every empire relied on someone else's credit. Every crown leaned on invisible ledgers. For the first time in history, power shifted from thrones to networks. But this was only the beginning. Because what started as merchant families would evolve into something far larger, far more complex, and far harder to see. The closed-door rule that changed the world in 1694, after a series of expensive wars, England was broke. So private financiers proposed a radical solution. They would lend money to the crown in exchange for a monopoly on creating public credit. This institution became the Bank of England, the world's first modern central bank. But the real innovation wasn't the bank itself, it was the network behind it. Because when the Bank of England issued credit, it wasn't just issuing money, it was issuing a new form of power. The power to expand or contract the lifeblood of the nation. And soon, other countries copied the model. By the early 20th century, central banks formed quiet alliances, clearinghouses emerged, correspondent banks linked continents, and an invisible superstructure was born, a global credit network with rules only insiders understood. This network was not democratic, not transparent, not accountable, and not controlled by governments because governments borrowed from it. Slowly, governments became dependents, not masters. And then came the moment the entire system transformed. Bretton Woods, the quiet financial coup in 1944. While World War II was still raging, 730 delegates from 44 nations met in a secluded New Hampshire hotel. Their mission: rebuild the global monetary order. Their outcome: unintentionally creating one of the most powerful, far-reaching, and opaque credit networks in the history of civilization. Bretton Woods did three things: linked currencies to the US dollar, linked the dollar to gold, created the IMF and World Bank institutions acting as global credit coordinators. But here's the twist most people don't know. These institutions didn't just support countries, they evaluated them. They graded them. They approved or restricted access to capital flows. A nation's future could be decided by a group of analysts in a room thousands of miles away, not by its voters, not by its leaders, but by the invisible credit network that now managed global liquidity. 1971. The day networks became supreme when Nixon ended the gold standard in 1971. The global financial system didn't collapse. Instead, it mutated. Without gold to limit issuance, a new kind of money emerged. Pure credit money backed by nothing but trust in the network itself. And from there, power shifted at lightning speed. The hidden explosion between 1971 and today, global debt grew 100x. Derivatives grew from zero to over $600 trillion. Shadow banking reached $240 trillion. Cross-border capital flows became faster than any regulation. But the most shocking fact? Over 85% of global money is not created by governments or central banks, but by private credit networks. Not printed, not mined, but typed into existence by financial institutions issuing loans. A government may print $1 billion. Credit network can create 10 billion before lunch. The sovereign illusion. Today, when a government wants to build infrastructure, fund a deficit, defend its currency, or survive a crisis, it doesn't turn to voters. It turns to markets, turns to rating agencies, to bond buyers, to liquidity providers, to clearinghouses, to credit derivatives markets. In other words, governments now borrow permission to function. They're real bosses, not presidents, not parliaments, not cabinets, but invisible networks deciding which currencies get punished, which economies get rescued, which nations get isolated, which crises get amplified, and which debts get extended forever. These networks became the quiet empire behind every other empire. The 1997 Asian financial crisis, 1 week, currencies were stable. The next, credit networks withdrew liquidity, and entire economies collapsed. Thailand, Indonesia, South Korea, all brought to their knees, not by war, not by politics, but by network confidence. The 2008 global meltdown, this wasn't a housing crisis. It was a collateral crisis. When confidence evaporated inside credit networks, banks froze, trade froze, governments panicked. The world discovered a harsh truth. When credit networks stop trusting each other, civilization stops functioning. The European debt crisis Greece didn't fall because of protests or elections. It fell because a handful of institutions decided Greece was no longer a creditworthy node. Invisible hands pulled funding. Invisible rules triggered defaults. Visible decisions rewrote an entire nation's future. The modern age of credit surveillance today, your life is shaped by systems you've never seen. SWIFT chips, CLS Euroclear, DTCC, dark pools, high-frequency liquidity networks, collateral rehypothecation webs together. They form something extraordinary. A global organism of credit, alive, evolving, and more powerful than any single government. Governments have tried, repeatedly, to reclaim control. They implemented regulations. They imposed reserve requirements. They demanded transparency. They introduced stress tests, created watchdog agencies. None of it worked, because every time a rule is created, a new credit instrument is invented to bypass it. Every time a loophole is closed, a new shadow entity appears in an offshore jurisdiction. Every time regulators think they understand the system moves somewhere they can't see. The networks are now faster than laws, smarter than oversight, more global than governments, more interconnected than any human can map the world. Thought central banks were the top of the pyramid. But central banks themselves rely on private dealers, money markets, and liquidity networks to implement policy. In other words, even the institutions meant to control credit depend on private credit networks to function. Look around. 2020 pandemic crisis, governments shut down economies. But credit networks didn't wait. In March 2020, liquidity vanished almost instantly. Corporate bonds collapsed. Money market funds broke. Oil futures went negative. Governments didn't save the system. The system forced governments to act. 2023 to 2024. Banking failures. Banks across the US and Europe collapsed in hours, not days, because credit networks instantly repriced risk in real time. Digital money wars, stablecoins, CBDCs, and decentralized finance aren't about technology. They're about who controls permission, because whoever controls credit controls sovereignty. And for the first time in 500 years, governments realize they may be losing the battle. Takeaway 1. Power has shifted permanently. Governments no longer control money. They participate in a system controlled by invisible, interconnected credit networks. Takeaway 2. Crises are not natural. They are network reactions. Most financial disasters happen when liquidity flows change, not when fundamentals change. Credit networks decide what becomes a crisis and what quietly disappears. Takeaway 3. The next monetary revolution will be about visibility Bitcoin. CBDCs and private stablecoins represent competing visions for one question. Who should control the global credit switch? Governments, private networks, or open decentralized systems? We're entering a new era where nations won't rise or fall because of elections, militaries, or resources, but because of who controls the invisible lines of credit running through their economies. If history repeats, and it always does, the next global shift won't come from a political revolution. It will come from a credit revolution. So if you want to understand what's coming, how to protect yourself, and how to read the signals before the rest of the world sees them, subscribe now, turn on notifications, and join me as we uncover the hidden financial forces shaping the century ahead. Because the networks may be invisible, but their influence is not.